Hi, this is Ken. If you're still valuing Tesla by car sales, vehicle margins, or short term stock price movements, you're probably missing the most important shift happening right now. And I don't say that lightly because what's happening under the surface today is not about this quarter or even next year. It's about how Tesla is quietly repositioning itself for a completely different economic role. Here's why this matters for you as an investor. If you understand how Tesla's evaluation axis is changing, not what the headlines say, but what the company is actually building, you gain a long-term advantage. You stop reacting to short-term noise and start seeing structural change before it becomes obvious to the market. In this video, I want to break down what's really going on, why so many people are still looking at Tesla the wrong way, and how this shift could change the way long-term investors think about risk, upside, and time horizon. Let's quickly ground ourselves in the current situation. Tesla's stock has been under some pressure recently. There's regulatory uncertainty, investigation headlines, and broader market hesitation around growth stocks. Looking only at that, it's easy to think maybe Tesla's growth is slowing, or maybe the EV market is getting saturated. That reaction is understandable, but it's also incomplete because the market is mostly focused on today's numbers, while Tesla is building the assumptions for the next decade, and those two timelines rarely move in sync. This gap between short-term perception and long-term structure is exactly where today's opportunity and confusion sits. So let's start with one of the most misunderstood areas: full self-driving. Tesla's FSD fleet is approaching 7 billion miles of cumulative driving data. More importantly, over 2.5 billion miles of that data comes from dense urban environments. That detail matters far more than most people realize. Highway driving is relatively predictable. Urban driving is not. Cities are full of edge cases, pedestrians, cyclists, unpredictable drivers, construction zones, strange intersections. For AI systems, this is the hardest possible environment. And Tesla has been training its system inside that chaos at massive scale, using real drivers in real life every single day. This isn't just a performance metric, it's a learning advantage. At this point, people often bring up competitors like Waymo. Waymo has impressive technology, no question, but it operates in limited areas under tightly controlled conditions with a small number of vehicles. Tesla's approach is fundamentally different. Millions of everyday users across the world are unknowingly helping train a real-world AI system simply by driving their cars. That's why I don't think of FSD as just autonomy. I see it as Tesla building the operating system for real-world AI. Once that kind of data advantage compounds, catching up becomes exponentially harder. Now let's shift to something that looks small but actually signals something much bigger. Recently, Tesla introduced a structured Robotaxi cleaning fee, charging users based on the level of mess left behind. At first glance, this feels trivial, almost boring, but here's the key insight. You don't create rules like this for experiments. You create them when you're preparing for scale. Human-driven services like Uber rely on drivers to handle problems in real time. Robotaxi systems can't. That means everything, damage, behavior, responsibility, has to be handled by software and policy. This is Tesla quietly moving robotaxi operations from concept to infrastructure, and that transition changes everything. Before we go further, keep this question in mind. What kind of company needs both massive real-world AI training and fully automated operational rules? That's where the strategy really starts to come together. Let's zoom out for a moment and connect this to the bigger picture. When you look at Tesla's moves individually, FSD data, Robotaxi policies, Optimus development, they can feel disconnected. But when you step back, a very consistent strategy starts to appear. This is where Elon Musk's comments about AI and labor become important. He's been saying something that sounds almost philosophical, that AI and robotics are the only technologies capable of solving the fundamental problems of the economy, and that in the long run, work itself may become optional. For some people, that sounds like science fiction, but if you line it up with what Tesla is actually building, it's surprisingly coherent. FSD replaces human driving labor. Robotaxi systems push the cost of transportation towards zero. Optimus targets physical labor itself. These are not random bets. They all point in one direction. Tesla is not optimizing for car sales. It's optimizing for lowering the cost of labor and movement across the economy. And once you see Tesla through that lens, traditional valuation metrics start to feel incomplete. Now, here's an unexpected fact that most investors overlook. The hardest part of autonomy isn't making the car drive, it's making the business scale without humans. Anyone can demo autonomy in a controlled environment. Very few companies can design systems that handle edge cases like damage, misuse, liability, and accountability automatically. That's why something as boring as a robotaxi cleaning fee actually matters. It's not about cleanliness, it's about removing humans from operational decision making. That's the real bottleneck, and Tesla is already solving it. So what does this mean for investors? Right now, the market is anchored to short-term reference points, quarterly margins, delivery numbers, regulatory headlines. Those things matter, but they don't define the long-term winner in a world where real-world AI becomes infrastructure. The more important question is this: 5 to 10 years from now, which company controls the dominant real-world AI platform? One that has data, deployment, hardware, software, and robotics working together. There aren't many candidates. From a long-term investor's perspective, this creates an uncomfortable situation because the moment the market truly shifts its evaluation axis, the repricing doesn't happen gradually. It happens all at once. By the time consensus changes, the opportunity is usually gone. That's why evaluation shifts are so easy to miss and so powerful when you catch them early. So I'll leave you with this thought. When you see Tesla news, ask yourself a different question. Is this news relevant if Tesla is just a car company? Or is it relevant if Tesla is becoming an AI and robotics infrastructure company? The answer changes everything. I'm not here to tell you what the stock will do tomorrow. Short-term price movements are noise. What matters is whether Tesla is building something structurally difficult to replace. And from where I'm sitting, that answer is becoming clearer every year. If this perspective helped you see Tesla differently, I'd appreciate a like. And if you want daily analysis that goes beyond headlines and focuses on long-term structure, consider subscribing. Thanks for watching, and let's enjoy the future that Tesla is quietly building. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.